Hey guys, and welcome back to the accumulation zone. In today's video we will be taking a little look into the future of what we can expect for this trading week. It's calendar week 41 and this is our current news schedule. So on Monday we have a USD bank holiday. So in America there's Columbus Day. And the usual fact, like Forex Factory says it here, it's low liquidity and irregular volatility. Heading into Tuesday without any news on the calendar right here. So we will see how that plays out after a bank holiday on Monday and NFP on Friday. On Wednesday, we have 8:30 PPI news. And at 2 p.m. we have the FOMC meeting minutes, where they discuss the previous FOMC interest rate decision. And the next FOMC interest rate decision will be in November, so next month. And then heading into Thursday, we have CPI news and also unemployment claims. We have unemployment claims every week, so I don't put too much emphasis onto or focus onto that one. But definitely, yeah, inflation data, CPI news are going to be very interesting on Thursday. And I think those are the major news of this new trading week. And on Friday, we have the consumer sentiment, but I'm also not too worried about that. Like the consumer sentiment, PPI news, and the unemployment claims are usually the types of news that accelerate or help our trading setups, where CPI and the FOMC news and NFP are usually, a little bit random. But still, sometimes we are able to predict them. Let's continue with the COT data report. So now we headed over to barchart.com to look at the Traders in Financial Futures net positions report. And specifically, we're looking at the net positions from the asset managers and the institutionals, the summary report. And what we can see here on both the S&P and NASDAQ is that we had a decrease in long positions. So here we had the net long positions and we lost 30,000 long positions and they added 33,000 short positions. Same thing goes for the NASDAQ. And here we can see the net positions over a 52-week range. Overall, we can see that we're still long. Net positions are still positive. So we can see we still have more long positions than short positions in the market. But maybe the only thing that sticks out here is that they're starting to get rid of long positions and they're starting to build up a net short positions over time. So we will see how that plays out. So now it's time to look at our monthly chart again here on TradingView, the S&P 500 continuous futures contract. As we can see, last week we spoke about this bullish fair value gap. And last week we closed right here on the consequent encouragement to 50% of this monthly bullish fair value gap, which was very interesting for us. And we see that once we closed right here on that 50%, we immediately had a new week opening gap, also a new month opening gap if we want to look at it this way, to the upside. But at the beginning of the week, Monday, Tuesday, and Wednesday, we repriced lower, filling in this entire monthly inefficiency. So we can look at this monthly bullish fair value gap. We can consider it repriced. Price has now delivered efficiently. It can still continue lower if it wants to. Doesn't have to. We just want to keep that in mind for our higher time frame. So heading into, this is the current forming month. This could have been already the low of the monthly candle, and the next 3 weeks of this monthly candle will continue to trend up. Maybe we just consolidate here for a little more time and rally during November and December like we spoke about in our last weekly outlook. Alright, now we covered the monthly time frame and we saw that we already repriced into our entire monthly fair value gap. If I bring it back up here, and inside that monthly fair value gap, we at the low at least, we had a bullish fair value gap right here. Let me turn it off. It's a weekly bullish fair value gap paired with a weekly new week opening gap. And we repriced into that. And on Wednesday, we formed the low of the week. I mentioned that on the Discord server that we're likely seeing the low of the week on Thursday, and that I'd expect NFP to continue further to the upside. Played out perfectly, so make sure to stay on track on what I share on Discord and the premium chat. But yeah, right here on the weekly we see that we repriced lower and we had a very strong rejection here on this weekly candle. So naturally what this points me towards is that we could see a continuation into next week to sweep this weekly high. This would be the previous week's high, to retrace into this big weekly inefficiency before maybe continuing lower. So right now, this is bearish market structure. We formed a high. We shifted here on the weekly. Higher low, lower low. So high, lower low, lower high, lower low. Makes sense. So right now, as long as bearish market structure is in place, we wouldn't expect higher prices here on the weekly time frame. Therefore, we want to see a continuation or a breakthrough through this bearish fair value gap, a retest for the continuation. This really depends. I don't think we will see it in October, maybe during November and December, but there's no point for us to predict the chart for the next 3 months. We are intraday scalpers. We trade the 5-minute time frame. We only want to know what the next week is likely to do. And I think that the next weekly candle could form a low on Monday, Tuesday, and Wednesday, Thursday throughout CPI, get us back into this range of this weekly fair value gap. Points of interest for me personally would be this old new week opening gap. That's why I have them on the chart. And also the 50%, let me draw this in, PD array of this weekly bearish fair value gap. So I want to have this line on here. Let's put that in our weekly object tree. And this is exactly at 4438. So this is our weekly time frame after we basically formed a doji on the weekly chart, respecting this bullish fair value gap, bouncing off this old new week opening gap, holding inside the monthly fair value gap, also holding this bullish weekly fair value gap. We want to see a retracement into this bearish weekly fair value gap for a potential continuation lower or for a strong push through it, maybe with CPI news. Who knows? We will get more information on Monday, Tuesday, and then Wednesday, and on Thursday we have CPI news. So plenty of time left. This is just a rough plan on how we can play this next trading week. So also note this weekly inversion fair value gap. This is a bullish fair value gap that offered support once, twice, and now we broke below it. So now we already retested it and delivered lower from where? Exactly this inversion fair value gap that offered support twice. So the weekly chart is very similar to what we do on the 5-minute time frame. It's just a higher time frame. So we use that to deliver lower. So now we want to see if we maybe see some resistance around the 4370 levels. But I think that should be enough for the weekly analysis. Let's drop down to the daily. So now we are on the daily time frame here on ES. And what we can see is that because we just started a new quarter, and what I like to do, I use the anchored IPDA indicator to see the previous 20, 40, and 60 days trading range based on these ICT IPDA concepts. And as we can see, at the beginning of the new quarter, here on the 3rd of October, we already broke the low of IPDA 20, so the low of our 20-day look-back period. And what we've done from here is sweep sell side, and note how the body's closed here. We perfectly closed on this low right here inside this bullish daily fair value gap. And remember, we had more confluences here at this level. We had this new week opening gap right here, a weekly bullish fair value gap, and still inside that monthly bullish fair value gap. So like said during the last weekly outlook, we expected some sort of a bullish reaction of those levels. And now that we already started to push back inside our IPDA 20 range from this high, to this low right here, I think we're gonna hunt for some internal buy side, which obviously would be this high. We already swept Monday's high right here, so this has already been cleared. So my eyes go to last Friday's high, and after that, every daily high inside of this ICT20 range. And right here, we also are up here, right at 4400. We have a bearish daily fair value gap, and if we now turn on our weekly bearish fair value gap, we can see that our weekly bearish fair value gap is starting above last Monday's high, so our previous week's high. I will talk about that more if we drop down to a lower time frame. So right here I'm referencing the previous week's high. This is obviously where our weekly fair value gap is starting from. And above our previous week's high, if we can manage to break through it with this momentum, with this kind of bullish momentum, I would expect it to at least reprice to 4400 into our daily bearish fair value gap. Here we have our new week opening gap. Hang on. This is our new week opening gap, also aligning perfectly with our, hang on, let me turn off the ICT, which aligns with our bearish weekly fair value gap, our bearish daily fair value gap, and the consequent encouragement to 50% of our weekly bearish fair value gap, which is sitting at 4438, 4438. So yeah, we will see. I will keep everyone updated throughout the week, depending on how we progress on Monday, Tuesday, Wednesday ahead of CPI. So yeah, let's drop down to the hourly time frame. So now we finish our top-down analysis by going down to the 1 hour time frame. I do not recommend going lower than the 1 hour time frame if you do your weekly outlook. It really doesn't matter if you start with the London session, in my opinion. So the 1 hour time frame for the broader, bigger picture, which is really the goal for the weekly outlook, or to get a rough idea of what the next weekly candle is roughly gonna look like. Yeah, I think the 1 hour time frame is perfect for that as our lowest time frame. So let's head back into our object tree and turn on my drawings for the calendar week 41 and turn on the liquidity as well, because that's all we need on our lower time frames later on. So quick recap of last week. I have already prepared that. I can share the template if you guys want in the premium chat, so you can simply copy this. But now let's take a close look. First of all, we get started with our previous weeks. We had the previous week's low right here, and on Monday we repriced lower from this bearish order block right here. I spoke about breaker block, order block. I spoke about that in the new YouTube videos covering the ICT breaker block, mitigation block, and the order block. I really recommend you guys to check that out. I covered this entire NFP week in these videos. They're going to be released today, and the next one is going to be released on Tuesday, and the last one on Friday. So yeah, like I said, make sure to check that out. Pretty good value in there. So we open up with this bullish new week, new month opening gap right here. New quarter opening gap, if we want to say it like that. Repriced lower, took the previous week's lower, continued lower, and down here we had a bullish market structure shift. I can draw this in here as well. Let me zoom in here. We had a bullish market structure shift. Let me grab my breaker block box. This is our breaker block. 1 hour high stop closing candle. If I drag this out to the right, we can see played out perfectly throughout NFP. 1 hour breaker block paired with our 1 hour order block. We look at consecutive up closing candles. So this blue line right here is our 1 hour order block. So we had lots of confluence around this area. We swept internal liquidity. With the NFP drop to the downside, 9:30 opened up and we had the strong pump. I didn't participate during NFP, and I'm pretty happy. Of course, there are mixed feelings because it was a massive and kind of predictable move to trade, but still on NFP, lower probabilities. And I try to stick to my rules as good as I can, so no entries for me during NFP. I watch parts of it, but if I don't trade, I do not have to sit in front of the charts. I can always use the TradingView replay tool to simply click through price action candle by candle. Alright, this is really important that I covered this 1 hour order block and breaker block and where we bounced off after the NFP news events. So now everything, I hope at least everything comes into perspective. We filled the monthly fair value gap. We hit the lowest new week opening gap that we possibly could on our retracement. We kept holding support on all the weekly and daily fair value gaps. So that's all nice to see. Here we have now the lower time frame perspective of what actually happened at the low of the weekly wick. And yeah, for me it's really important because this helps me to understand that order flow right now is bullish on the higher time frames, which leads me to expect that next week is going to be a up-closing weekly candle. Important, guys. So out of this area, change of state and delivery, we pushed back above Friday's initial high here at 6 a.m. So this right here has been a fake out move, or how ICT calls it, a Judas swing. So right here, fake out move that swept sell side liquidity, internal sell side liquidity. We kept holding support on the order block paired with the breaker block. So our low of the month, who knows, might be locked in. But at least I think for the next week, because with this bullish market structure shift after having swept sell side, even though if it's just internal sell side, we have a new order block. This will be covered in the next video, the ICT for Beginners series that's being released on Tuesday. So make sure to give it a watch. I also talked about this specific setup here as well. So right here we have a 4 hour and 1 hour order block. These two consecutive down closing NFP candles, I look at them as a order block, and paired with that order block we have a 1 hour bullish fair value gap. So yeah, I would expect Monday or Tuesday to retrace into that. Monday, US bank holiday, Tuesday, no news. We still get nice moves on Tuesday without news, especially if it's after a US bank holiday. But on Wednesday and Thursday, I would expect most of the action to happen. But yeah, like I said, I will keep everyone updated to, like, once I know what Monday is setting out to do. Is Monday immediately pushing up, clearing the previous week's high, clearing some external buy-side liquidity to retrace into some internal sell-side liquidity, reprice lower into this 4 hour bullish fair value gap, 1 hour bullish fair value gap, and the 4 hour order block? I think so. I think it's very likely that we're gonna bounce somewhere of this area, roughly the 4300 area to 4320. And yeah, one more thing that I wanted to add for this 1 hour analysis is that if we measure this Judas swing or the fake out move with the NFP news event, that completely has been displaced. And look how strongly we displaced this NFP fake out move to the downside here on a 1 hour time frame. This is really bullish order flow. So what we do then is we measure from the high of our fake out move right here to the low, like this. And then we project standard deviations. This is really important. I want to drag it out to make it a little bit bigger so it's easier to see for everyone here on the video. Alright, so we hit the 0.5 standard deviation, we reject. And now our next target would be buy-side liquidity right here. This is Friday's high. We talked about that on daily time frame. This is daily buy-side liquidity, which is almost perfectly aligned with our -1 standard deviation of this entire NFP fake out move to the downside. So this is where we could expect price to go, at least 1 standard deviation. It becomes more interesting if we look at the 4th standard deviation, where a rally usually stops, and after such a strong displacement and a long downtrend where we have rarely cleared any buy side liquidity. We left buy side behind right here. Let me use the drawing tool. We have never touched that. Buy side liquidity here, here, here. Here we even have equal highs. Buy side liquidity here. We just had a very long sell-off during September. Buy side liquidity here, here, here. We already get swept this one. So this could really be the turning point for the S&P 500 to clear some of that internal sell side, buy side liquidity. Sorry guys. And in terms of standard deviations, the -4th standard deviation would deliver us right here into the 4565 price level, which would be the high of the month of September. We will see. This would be very bullish. Of course, this is just guesswork, but based on the fake out swing and projecting these standard deviations, so far it looks like they're lining perfectly with buy side liquidity. These are the same settings that ICT is using in his video where he talks about standard deviations. So yeah, let's see what's going to happen. And the last thing that I would like to add before I end the weekly outlook here on ES is let's take a look at the weekly bearish fair value gap to see how everything aligns here on the 1 hour time frame. We have our weekly inversion fair value gap paired with Friday's high, and then the weekly bearish fair value gap starts at 4383, which is the previous week's high, an old previous week high marked by this buy side liquidity. And yeah, there's more buy side, the new week opening gap. The -2 standard deviation of the Tudor swing is lining up roughly with this buy side liquidity and the consequent encouragement of the weekly bearish fair value gap. And if we now take a look at our daily bearish fair value gaps, we see to price into our daily bearish fair value gap, which I think is very likely, we will have to at least reach a -1.5 standard deviation and clear orders buy side. But before I want this buy side cleared, I'd like to see a retracement into this for our bullish order block, 1 hour bullish order block, and this 1 hour bullish fair value gap. So overall, I'd expect a bullish week, but even in a bullish week, we still get downtrending days. So I would expect Monday to range, consolidate a little bit, low volatility because it's a bank holiday like we discussed earlier, and on Tuesday without news, maybe a retracement into our order block, but let's see about that. We already swept external buy side liquidity, Monday's high, which was the high of the week up until Friday, until the NFP pumped to the upside. It looked like Monday is going to remain the high of the week, but I already mentioned that on the Discord server that this is not likely to remain this way. It's very unlikely that Monday is forming the high or low of a week. That must be a very, very bullish or bearish week, basically, in terms of the weekly template. Alright guys, I think that's gonna be it. If you have any questions, feel free to ask me on the Discord server in the premium chat, and I will do my best at answering your questions. Until then, I will see you on Monday and Tuesday for the live streams. Take care and enjoy the rest of your Sunday. Bye.